Good morning, Wall Street winners. It is Tuesday, December 10th, and it's a bit of a slow day today in the market. If we take a look at the Bloomberg and the Bloomberg app and the futures, you can see that the NASDAQ and S&P 500 are in the green, only slightly, and the Dow is down 96 points, which is 0.22%. So again, a little bit, not anything to be concerned about in my opinion, but that's kind of where we are. In terms of news headlines, things are pretty flat today. We did have some earnings come out after close yesterday. I want to touch upon those before we get into just the general overview. So two of the companies that reported yesterday were in the tech space. The third was in the automotive retail. So AutoZone reported they missed on earnings and profit, did say that their future forecast was in line with expectations, but they're down in the pre-market. The other ones in the tech space though, Mongo DB. Mongo DB came in and it beat on revenue and profit, but they mentioned something in the call that got analysts concerned, and the stock is off almost 7.5%. Now, it does appear to be climbing back, and I think this is a great opportunity to buy this stock because they're on track for a banner year. Stock has done extremely well this year, and they beat on earnings and profit. So I think this is just a minor setback, and this is the kind of stock I talked about yesterday, saying that if you find a good stock that has good earnings and good profit, but for whatever reason it goes down, it could be they announced their CFO is leaving, and there's concern over that. But the CFO really is a minor part. I mean, obviously, big role within the company, but not driving revenue or sales, but helping with the management overall. It's not a role that is going to affect the earnings and or the revenue. It could slightly affect the moving forward future forecast, but very, very little effect on it. So I think this is a great opportunity to buy Mongo DB. The other one that came in yesterday that missed on earnings, first time this year that it missed on earnings, and where is it in my list here, is Oracle. And why can't I see the symbol for Oracle here? And Oracle is down in the pre-market. There it is, about 10%. Now 7%, so it's come back a little bit. This is a stock I wouldn't be buying right now. So I think Oracle, it's obviously had a great year. Look at that, it's up 81% year to date. But I think it's kind of hit the end of that growth trajectory. This quarter was poor. We may see a second poor quarter. We had a couple poor quarters in the past for Oracle, which sent the stock down. And then this, the last two had been positive, and they sent the stock up. So you got to be careful with this one, in my opinion. Huge company, huge ship to run, but I would be buying Mongo over Oracle today in terms of stocks that have taken a bit of a dip. Another stock that took a dip yesterday in the market was Netflix. Again, Netflix, incredible company, incredible year to date, another 88% gainer. I don't know if there's much more for that company to do as well at this point, so I'd be staying away from Netflix until we saw a bit of a pullback. Let's go back to the top and work our way down. So here we've got crude oil. Had a great day yesterday, and today is off 16 cents, but it looks like it could go green again. Right now, most of the oil companies are in the green, and if crude starts to pop up above 68.40, then I think we're going to see green again within oil. I'm not saying that's going to happen. I'm just saying that if it turns or continues on an upward trajectory, then I think the oil companies will come around as well. Now, if it doesn't, it will bring the oil companies down, and I think it's a good opportunity to buy them because yesterday was a great day for oil. So take your profits and then reinvest them when the prices drop. So sell it at a high price and buy it back when it drops lower. That is the whole philosophy here. So if we take a look at health and retail, pretty much red on the screen yesterday and almost pretty much red today going into the pre-market. So avoiding retail at this point. We've got transport, which we're just ignoring. Although I have to say CNR at 150.86 is extremely attractive. We were talking about this when it was at 154. It's come off of those highs. It's down 10%, 9.5% year over year. I think we have a lot of potential in this company going forward. So if you're looking at buy and hold, it's got a decent dividend of 2.3%. But if you're looking at a long-term buy and hold, I do think that we'll see this stock get back up into the 170s in 2025. So that'd be a 20% uplift. It'd be a 10%, 10 or more percent gain. Plus you'd get the dividend on top of that. Can you do better in other stocks? 100%. But this would be, let's call it, more stable. Kind of like the idea I put forward the other day of Con Ed. And here we got Con Ed down in the 95 range. So again, this is a stock that should get back up to 106 at some point in 2025. And it's got a pretty decent dividend here of 3.5%. So you have the ability to kind of let your money sit in that. But the other way to play, I'm going to call it passive investment, is maybe to look at an ETF that has a mixed bag of stocks like the S&P 500 ETF, and just put your money in that, and then you're taking the risk out of an individual stock, an individual sector, and putting it in a basket of stocks and getting the appreciation based on how all of those stocks perform. And hopefully the majority will perform really well, and that will carry up the others. Scrolling down through oil today, you can see that it's a mix of red and green on the screen in the pre-market. Valero was up 70 cents earlier. Then it dropped down to being down $1.55. The others look like they're in the green, but again, we're still 35, 40 minutes away from the open. And crude is making its way back. So if crude does make its way back again, I do believe it could be a positive day for oil stocks. Valero yesterday had a great day. I mean, it was up $3, 2% yesterday. So hopefully you guys got in on that. I was advocating for that yesterday pre-market. And then we get into the tech sector. And we've got Micron coming out with earnings next week, so 8 days away. I think the earnings here are going to be fantastic. This would be a stock that I'd be buying in the low 100s. Looks like it's going to hit 105 today in the pre-market, up $2.63. I'd be staying away from the cybersecurity stocks right now, CrowdStrike, the others, PanW and Net. I think they've had a good run. Don't know if they have much more steam. We saw CRM spiked on their earnings recently, back on at the end of the day, Tuesday into the Wednesday morning session, and they're starting to come off that high. So that's typically what happens. They're now kind of losing favor with those that are following earnings. And then as we scroll down further, looking just really for bigger moves, you've got Microsoft, which has made its way back up to now 446. Looks like it's going to come off that slightly today. But that was something we called a couple weeks ago, saying when it was in the 420s that it was going to get back up to 445 before the end of the year. So it's there. There's a lot of reshuffling going on right now in different mutual funds and other baskets of stocks by companies that have to rebalance their portfolios to hold a certain percentage of each stock. So if one stock had tremendous gains, like an NVIDIA, they're going to have to sell some of that off, and that's going to put pressure on the price based on just your normal economics of supply and demand, that principle. So now we continue scrolling down. I already talked about Oracle and Mongo DB. I would be looking to get into Mongo DB today. Tesla had a okay day yesterday, nothing really special. Looks like it's up today. I can't see Tesla remaining at this level. I think it's going to be down around the 300s, if not into the high 200s, into the first quarter of next year, but we'll have to see what comes out of that. Meta was off yesterday, down $10. Still an expensive stock at $613. Looks like it's back on the way up this morning. I do think it's going to get up to the 620, 630 range, but I'd be waiting for a pullback into the 590s before I bought back into that. And then you've got BABA having a great day. All the Chinese stocks had a great day yesterday because of some talk over loosening economic and financial restrictions in China. And that spurred Baidu and JD.com and Baba and most of those Chinese tech companies. So they had a bit of a run up. They're pulling off of that today. So that was just a bit of a news pop. And then you've got Google. Look at this. Google was one we have been advocating for. It is up yesterday. It's up almost $7 in the pre-market. So we told you, I was telling you yesterday, telling you last week, this stock is going to 185 bucks, and it looks like it could actually get there today. So hopefully you bought into some Google and have been holding that and riding it up when it hit the low 160s. It's now continuing its trajectory upwards. So let's see where that ends. And then Adobe, it's got earnings tomorrow after market close. So keeping an eye on this. This is pulling back a little bit this morning. I'd be interested in actually maybe getting into this in the 547 range today and holding that through to the end of the day and into after hours, maybe even to the market open if earnings come out as good and positive, and that stock shoots up, which I expect that it will. And then TSM dropped yesterday below 200. I'm going to wait for this stock to pull back into the low 190s or 180s where it has in the past. That's been its trading envelope if you look at the last month, and buy it there, ride it up into the 200s, and then sell it and wait for it to come back down. That is a great way to make a tidy little percentage profit. And then finally we get into finance and the financials. Most of them are, it's a bit of a mixed bag of red and green on the screen, but for the most part, there's not a lot of activity here. Again, I think this sector is overpriced, so I am staying away from it, although I will be buying SoFi on these dips. So it pulled back into the mid 15s yesterday, and I think it's attractive. It's coming down even more. I think it may pull back down to like the $12 range by the end of this year, but I think it has the ability to get to 20, if not 25 or 30 next year, based on the earnings and profit trajectory, market share growth that it's generating and creating right now in that space. So that's where we are today. Good luck with your trades. If you're liking these videos, please hit the like and